Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. So earlier today, I posted a video talking about the silver supply falling, pushing prices higher. And in that video, it just kept explaining how much, less silver we're producing every year, and the top silver producers that, produce 50% of the entire global supply, how they're down, several percent. And I really wanted to understand why though, and they didn't answer it in that article, so I told you guys I would dig deeper and try to figure out what's going on, why the supply is shortening. Is it because it's not as profitable? Is it because it's harder to find? Is it because, it's they're digging other metals, or what is happening? So I did my research and I found this article. The link will be in the description. If you want to check it out yourself. This is from mining.com. It's titled Silver Miners Quarter 1 2019 Fundamentals. Now, this article does explain everything, and it's pretty shocking. I definitely think you guys are going to find this interesting. So let's dive into it. So the silver miner stocks have been pummeled in recent months, plunging near major secular lows in late May. Sentiment in this tiny sector is miserable, reflecting silver prices continuing to languish relative to gold. This has forced traditional silver miners to increasingly diversify into gold, which has far superior economics. The major silver miners' ongoing shift from silver is apparent in the recent released Quarter 1 19 results. So, like I said, I was partially right. They do dig a little deeper, but they're switching to gold more because it's more profitable. I've been talking about this so much lately that miners aren't making as much profits right now, so that drives them. It's big business. The dollar is king. The dollar rules everything. And if they're going to be more profitable in another area, they're going to do that, which is even more incentive to be investing into silver, not even just precious metals, but silver, because, it's even lower, low supply, high demand. What does that do? It shoots the price up, especially as silver is pushing towards $18. But anyways, let's keep going. So 4 times a year, publicly traded companies release treasure troves of valuable information in the form of quarterly reports. Required by the U.S. Securities and Exchange Commission, these 10 quarters and 10Ks contain the best fundamental data available to traders. They dispel all the sentiments and distortions inevitably surrounding prevailing stock price levels, revealing corporations' underlying hard fundamental realities. The definitive list of major silver mining stocks to analyze comes from the world's most popular silver stock investment vehicle, the SIL Global X Silver Miners ETF, which stands for Exchange Traded Fund. Launched way back in April 2010, it has maintained a big first mover advantage. SIL's net assets were running $294 million in mid-May, near the end of Quarter 1's earnings season. 5.6 times greater than its next biggest competitors. SIL is the leading silver stock benchmark. So I'm gonna to keep this video timely, I'm going to share the highlighted stuff. I'm not going to go into all the different details, but if you do want to check it out for yourself, you can dig deeper than I'm talking about in this video. I just want to highlight the main points. So as of mid-May, these major silver miners accounted for 94% of SIL's total weighting. The Quarter 1 they collectively mined 70 million ounces of silver. The latest comprehensive data available for global silver supply and demand came from the Silver Institute in April 2019. That was covered 2018, when the world's silver mine produced a total of 855 million ounces. That equates to a run rate around 213 million ounces per quarter. So assuming that the mining pace persisted in Quarter 1, the SIL's top 17 silver miners were responsible for about 33% of the world production. That's relatively high, considering just 26% of 2018 global silver production output was produced at the primary silver mines. 38% came from lead zinc, 23% from copper, 12% from gold. Nearly 3/4 of all silver produced worldwide is just a byproduct. Primary silver mines or miners are fairly rare. That's interesting that, almost all the silver, a good amount of silver they find is actually, it's a byproduct. It's by accident. They're actually looking for lead, zinc, copper, 12% from gold, and they rarely have just, pure or focal point in silver. So that's really interesting. This should show silver scarcity to new levels, and silver, how low or how much of a shortage is possible. Scarce silver-heavy deposits are required to support primary silver mines, where over half of their revenue comes from silver. They are increasingly difficult to discover and even more expensive to develop. which I've also mentioned it's getting harder to find as well. By the way, guys, reading this article, it should really show you how much potential silver has, because it's not only getting harder to find, miners aren't profiting, so they're looking towards other metals, which means the amount being produced, or the supply, is shortening. Low supply, high demand. What does that do? It shoots the price up. Silver demand is rising, as you know, what precious metals is a great alternative against hyperinflation. So this is all coming together, and it really does make sense in my eyes. So anyways, it goes on to say, and silver's challenging economics of recent years argue against miners can even pursuing it. So even traditional major silver miners have shifted their investment focus to actively diversifying into far more profitable gold. But this was written earlier. This was before the bull market or the silver rally. So silver price levels are best measured relative prevailing to gold prices using the gold to silver ratio, which they talk about in this. They've witnessed level 26. Okay. So they're saying the last time it was where its level was at 26 years ago in 1993, but now it is, up in the 95-to-1 ratio. I'm kind of just, I'm kind of back, ad-libbing what they're talking about. So let's go into something else right here where it's talking about so the big silver companies in South Korea, Mexico, and Peru present other problems, and this kind of branches off the article I talked about in today's earlier video, if you guys want to check that out. The reporting is naturally done in their own languages, which I can't decipher. The article I actually read did decipher this, but some release limited information in English, but even those translations can be difficult to interpret due to the differing accounting standards and focuses. It's definitely challenging bringing up quarterly data together for the diverse SIL top 17 silver miners. Well, that article, I showed a lot of different graphs and charts. It did actually break it down. Some of it was in different languages, but it had parentheses next to it what it was in the English version, so it was easier to analyze. But analyzing them in an aggregate is essential to understand how they are faring. So each quarter I would wade through all available operational and financial reports and dump the data into a big spreadsheet for analysis. Some highlights make it into this table. Blank fields mean a company hadn't reported the data by mid-May, quarter when okay. So this is kind of going over the chart he's creating. So I want to go over some more stuff, not just all the chart data, because I talked about a lot of that in my last video. So it offers a fantastic high-level read on how major silver miners are faring fundamentally as an industry and individually. The crazy low silver prices really weighed on an operating cash flow and earnings in quarter one. The silver miners' years-old shift into gold continued. These companies are having no problem just surviving in the silver sentiment wasteland, but they probably won't be thriving again before silver recovers, which it is starting to now, so we see that. Silver's weakest price relative to gold in over a quarter century have continued to devastate silver mining sentiment. Investors understandably want nothing to do with the forsaken silver miner, so their stock price languish near major lows. Even their own management seems really bearish, increasingly betting their company's futures on gold rather than silver. Quarter one price action further supports this decision. So it's actually a lot more serious than I'm realizing. They're even turning against it themselves and putting money that gold's going to be more profitable. Even as silver gets harder to find. So this is really interesting stuff. I'm really glad that I dove a little deeper into the questions I was asking in the last video. Because this shows a lot that I was wondering about. Because when I was looking at that last video, those charts, something was up, and I was wondering what is going on. So I'm really glad that I figured out, the reality of what's really going on and why the supply is falling so much. So production is the lifeblood of silver miners, and it continued to slide. The SIL top 17 that had reported their quarter one results in mid-May again mined 70 million ounces of silver. That was down 3.1% from quarter one of 2018. So it's not just these three major silver miners producing less of the white metal. It's the entire industry, and according to the Silver Institute. So 2018 was the third year in a row of waning global silver mine production. So this is crazy. This is actually crazy. Uh, I'm not worried because, silver has so much potential by itself for how many uses it has, being the most highly conductive metal for thermal conductivity and electricity. And even if we're stacking it right now, $17 is still an extremely cheap price, an undervalued price. So if we can purchase a lot of it, hold on to it for 10, 15 years as the supply keeps diminishing, then we're sitting on a jackpot. It's almost like this is good for silver for the long term, or for the longevity aspect of it. A lot of silver stackers might be worried. A lot of silver stackers might be celebrating from this article. It really is perspective, and it really does. It depends on when you're looking to, sell, and that also depends on what type of stacker you are as well. I'm also curious how this is going to be affecting semi-numismatic silver compared to bullion. I think this is more of a bullion problem because semi-numismatic silver appreciates on top of spot price, so the correlating price compared to spot price is pretty much, irrelevant when it comes to semi-numismatic coins that, appreciate triple in value even if spot price stays at $17. But I'm curious what you guys think about this. Like I said, the link will be in the description. I'm glad that I was able to find some information to, back up my last video, because I'm sure you guys were wondering the same thing as well. And I think I mentioned, or I found a lot of stuff that a lot of us didn't know about or didn't know the severity of. So I'm glad that I was able to at least find this article. So anyways, though, if you did enjoy this video, make sure to smash that like button. Subscribe if you're new. I post daily videos. So yeah, I enjoy your guys' time. Thank you guys for tuning in. This was Silver Slayer. I will see you guys soon. Peace.